When does the curve fully flatten in the States, do you think?
I mean, I think it's approaching. You can clearly see when you're at 30 basis points here. I think you've got so many competing factors now on US interest rates. On the one hand, the Fed is committed to its tightening in terms of base interest rates. On the other side, you have all of the political action and kind of increasing discussions around US fiscal stimulus, the tax incentives, the inflation, the jobs all being strong, that you could actually see a yield inversion in the next couple of months, and then interesting things start to happen.
Interesting things start to happen. The yield curve has got a good track record in predicting recessions. Do you think it will have one this time?
I think the base US economy is strong. I mean, all the factors are indicating that way. And with the tax cuts coming through and with potential fiscal stimulus, if Trump wins the midterm elections, which I think is actually quite likely, I think the US suddenly becomes a bit of a leader in terms of this new world of asynchronized global growth. The Eurozone PMIs, they're okay. Asian PMIs are coming down, but it seems like the US is actually taking a lead at this point.
When does that sugar high fade, though?
I think we're probably about 1 or 2 years away from that.
Right.
I think we've got enough runway right here and enough firepower to sustain us for that period. But I think the key element will come when you get this tension between the US going for full fiscal stimulus and borrowing at 5% of GDP, and the Fed hiking, with every percent of Fed hiking adding an extra $200 billion to the US interest payment.
So Larry Kudlow has, and we haven't seen this sort of since the Nixon era, Larry Kudlow started sort of providing suggestions for the FOMC in terms of how maybe it would consider its raising profile. What does that tell you about kind of how this is going to roll out? Because we've got the sugar high from the tax cuts now, but now the White House is trying to put pressure on, or trying to put pressure on the FOMC. If you're the central bank, do you kind of not listen to that? I can't remember who it was. It was Dausenberg, or maybe it was Trichet said here in Europe, kind of, I hear but I don't listen. Is that how the FOMC is going to approach sort of the Kudlow comments, do you think?
I think that's how they approach it initially. In many ways, the US is resembling an emerging market. So we see these things to the extreme in countries like Turkey, for example, where you have that tension.
That is an extreme, yep.
But it is heading in that direction whereby, again, it's this tension between the fiscal stimulus, the tax cuts, and where the interest rate pathways are going. With the strength of the US dollar, a little bit of tension comes out of the inflation equation unless the jobs really start kicking in from here and kind of that whole Phillips curve element. But I think that there'll be increasing pressure on the FOMC to make the discretionary choice. Because on the one hand, they have to increase rates just because, you know, you're approaching that inflation level. But on the other hand, as you go into next year, you have discretionary choice as to whether or not you hike aggressively.
Yeah.
And if the US government is saying this is really going to interfere with the economy, that will have a direct impact on sentiment, and it goes straight through reflexively into rates. So I think next year is when you get that happening, and then that's incredibly negative for the dollar.